Welcome investors to the 40 Finance channel. My name's Jeff Beers. Today we're digging into SmileDirectClub. I recently purchased a few lots of SmileDirectClub and I wanted to talk about why I decided to purchase this stock. I did something similar with Rocket Mortgage earlier in the week and you guys seemed to like it. So we'll talk about the bull case and bear case for SmileDirect, why I'm on the bear side, and my projections for the next couple years with this company. Quick reminder that my stock picks and projections are my opinion for your entertainment only. Please talk to a professional before taking on the risks of the stock market. But for those of you who already understand the risks and love to jump into stock analysis and personal finance videos, please subscribe to the 40 Finance channel. Thank you to everybody who's subscribed so far. We're getting close to that 10,000 subscriber mark and I can't thank you guys enough. Please consider joining if you haven't already. All right, let's kick things off with a quick overview of where SDC stands today. And you can see that the stock price right now is $7.67. We got a 52-week range that goes from 364 in the March lows all the way up to 2110. So SmileDirect is definitely hanging closer to its 52-week low. We'll get into why about that in just a few minutes. No PE ratio and a negative earnings per share right now for SmileDirect. However, they did once again affirm that they are targeting for profitability in Q4. I'm going to imagine that they mean at the end of Q4, but nonetheless, they just had an earnings call and they've been talking about this all year. So even with COVID, they are still targeting Q4 to start eking out profits. Looking at the top of the screen, you can see this is a relatively small company compared to others that I cover here. You got trailing 12 months revenue, $631 million, cash on hand of $389, and a debt level of $432. Debt in this case, I would say, aligns pretty well with the cash on hand and the revenue that they generate, particularly when we talk about revenues that they would generate in a normal sort of non-pandemic year. All right, so I mentioned how SmileDirect is very close to its 52-week lows, and there's a couple reasons why. Most notably is their Q2 earnings that came out a week or two ago. And while they weren't horrible, they just showed the impact that COVID was having on the company. And that apparently was enough to spook some analysts and investors' concerns about maybe the growth that was originally projected for SDC is going to slow for the foreseeable future. And quick clip here from MarketWatch, SmileDirect stock falls after mixed Q2. I highlighted a few lines in there. Second quarter sales above Wall Street expectations, but GAAP EPS was below forecast. SmileDirect said it lost $95 million or 25 cents a share in the quarter, compared with a loss of $32 million a year ago. Sales fell to $107 million from $196 in Q2 a year ago. And lastly, way at the bottom, SmileDirect said it remained on track to reach adjusted EBITDA profits in the fourth quarter. I put my own notes there in the middle, the COVID impact, right? How does it impact a company like this? Well, there's smile shops where they sell and sign people up in person for the service. Those were closed like so many other retail outlets. The dentist partners were obviously closed. If you haven't tried to go to the dentist in March and April, you would know that. And then the rebills, which is part of how things work with these teeth aligners. You have to pay a monthly fee or you have to get readjusted and get your new aligners. Those all slowed as well. SmileDirect also does have a few international regions, which we'll talk about. Those regions were similarly impacted in a COVID type manner. All right, so you had the lockdown, you had the stock market crash, bringing the stock under $4, started to eke up a little bit, then you get hammered with this Q2 report. But there's another thing that you should know if you're going to invest in this company, and that is back in February of 2020, NBC sort of ran this investigative journalism piece that was trying to highlight problems people were having with the SmileDirect aligners. Now, I remember looking into that when the piece first came out because the stock dropped pretty well at that time, and best that I could tell online from the reviews and whatnot, I wasn't seeing the same story that NBC said. I think in the internet reviews world, you're always going to have some bad ones, right? If you've ever looked at like an Amazon review and some people bitch because the product was fine, but the box was beaten up. That was all the kind of stuff that I could find about SmileDirect, but a majority of it was positive. So I was surprised about the NBC report, and as it turns out, SmileDirect back in May went after NBC for that report. And you can see on this screen just the news clippings that I posted here. On the bottom in the yellow is that NBC original report. You can look that up pretty easily on Google if you want to read it. It's a video. It's maybe 10 or 15 minutes long if you want to watch. But then on the top you see SmileDirect suing NBC for $2.85 billion. Most notably in that sum, I think, was 900 some million for stock depreciation associated with this report. All right, so regardless of what you think about the NBC lawsuit, you also had the COVID concerns for the Q2 quarter, and all of a sudden you kind of have this beaten down stock, which is right where I start to get interested in things. And it's been very difficult to find stocks like this on the market that didn't already have like some kind of run-up priced into it. So I've been itching to get into travel a little bit. Most notably, I've always been infatuated with Expedia and Booking Holdings, but those have already run up, certainly for this year anyway. So when I saw this opportunity where a stock's been beaten down, that's where I kind of got excited. And here recently I've been doing a lot of research, and that's what we're going to dig into right now, is what I've discovered about SmileDirect and ultimately why I chose to buy the stock. All right, so on this first slide, just to kind of tackle that the lawsuit and the NBC report, at least for me, was just to make sure that we do not have a bad product that we're going to invest in, right? This slide here, which was in SDC's Investor Relations, one of their, it might have been the Q2 report, you can see, and you can verify this yourself, that Google reviews are very strong. Very strong. And what's great about SmileDirect is they actually get 2 forms of Google reviews transacting back to the brand. You have the .com reviews, which is, the lion's share. Let's just pretend that those are half of the reviews. And then depending on where you live, if you have a Smile Shop or a partner dentistry that sells SmileDirect products, most of those, certainly the one in my area, had marvelous reviews talking about, the hygienist or the dentist who was helping with the application. It was all 5 stars. So I do not personally believe that we have a failed product on our hands with this. You'll have to make your own decision. But SDC does a good job on this report because outside of the positives, if you look how they're comparing to competitors and other dental service offerings, you can see that they are trending way and above, and it's not one of those things where they only have 5 reviews versus the competitors. They're pretty adamant about pursuing reviews and acquiring them, and that's one of the best parts about a digital business, is it does allow for that. All right, for me anyway, I've eliminated the problem of does SmileDirect have a bad product, and is that going to be a major growth issue going forward? I don't personally see it, but do your own research. Now let's dig into the machine, right? How are we going to grow? 2020 has had a couple setbacks now. What is the bull case going forward? We can't make COVID go away, but the general assumption here is that it will. I think the majority of dental practices are finally starting to open, and people are getting more into this game, particularly with back to school. I'm going to make the assumption that dental office visits and purchases of dental services in Q3 and Q4 will be remarkably better across the board for every business than we saw in Q2. And for SmileDirect, this is really important because another thing that they've done, which sort of eliminates some of the concerns in the NBC report, was this faction of customers that would just, they're interested and they want to buy it, but they would just feel a lot better if a dentist partnered with them on their journey. So instead of just doing the at-home kit where you put some moldings in your mouth and you ship it back to the store, these particular customers, they actually want to go to the dentist. They don't want to do it 100% online. They want to manage some of it online. But I would say SmileDirect has been very smart into making a support network of what they call smile shops, which are basically retail locations, and partner dentists to help them sell more of their product and sort of relieve people of the concept that they might be doing it wrong if they do it on their own. All right, so this is a snapshot of their what they call professional channel, and you can see then the gray wording at the top. This is a complementary to our existing offering and removes friction for customers who want an in-person experience. And then down below, you've got several different ways that this can happen. You can have a SmileDirectClub member, aka they signed up online first. Then they asked to go to a dental practice for an appointment, so SDC can handle that. Then you have someone who at first was a dental office patient, so they don't know about SDC, but that particular dental office offers this as a solution and they sign up there. And then they're managed through the SmileDirectClub online. The third option is very similar to the second, except this patient, once they get set up, they still want to come in to the dental practice along the way to get updates and whatnot, and just have a professional do some, x-rays or whatever. That's what the third tier is. And then lastly, the SDC member, they call this the referral network, where SmileDirect takes the leads that didn't close from their online website and they send them to their dental partners and say, hey, Mrs. Smith, she got on the website, she went through 3 or 4 things, and at the end of the day she didn't buy, but here's her name and info. Will you call her up and see, does she want to come to your office and do this in person? So they've got a wide range of ways to convert to people who want to be involved with a dentistry. And from my standpoint, that's a really smart way to boost conversion rates. All right, for this next one, I want to take a quick look at the last 3 Q2s for SmileDirect. And let's get a feel for how things were growing and then, what happened when the world went on pause there for a few months. So this is directly out of the Q2 investor report. If you look off to the left, you got Q2 in sort of an orange box. And let's just drop right to the bottom on total net revenue. And you have $106 million in revenue, Q2 2018. Follow the black line to the green box, and you see that grew almost 100% in 2019 Q2 to 195.8. Then, however, you follow the box to the yellow on the far right, and that dropped basically back to 2018 levels. All of these things related to offices being closed and a general lack of demand in this COVID quarter. All right, so the point of that was to show you, hey, like prior to what just happened to the world in the pandemic, from 18 to 19, they were growing very close to 100% clip, Q2 over Q2. And so there was pretty big expectations heading into 2020, and obviously those fizzled out as the pandemic came about. Now, even though it appears that 2020 may be sort of a stationary bike kind of thing, pedaling in place for SDC, they do have some pretty attractive growth initiatives that were supposed to come about here in 2020 and be a banner year. So let's take a look at how they're marching towards growth. And we know we might not see these things as anticipated in 2020, but for me, my mind starts churning towards 2021 and how these things spin back up and start to make for a winning stock play in the longer term. All right, if you look in the top left, I put some red letters, pre-COVID. This slide here came out on February 2020. This was their annual report, Q4 plus annual all-in-one, and it does a great job of illustrating how they're going to grow beyond 2020. Now, at this time, they didn't know what 2020 was going to be for so many businesses, but the headline, of course, growth rate of 20 to 30% annually on a global basis. Then I highlighted how these things happen. We're in North America, top middle row, anticipated growth rate 10 to 20%. Low end of that range assumes no further penetration into new age demographics. The high end of that range assumes further penetration of the teen market, which represents 2/3 of industry case starts. What they're doing with the teen market, and I don't believe it's represented on this slide, is they've actually created an entire offering dedicated to teenagers, SmileDirect Teen. And in this case, they're finding that work with the dentistry has helped as far as getting parental approvals and just generally getting the conversion rate up and the comfort level up. So depending on how SDC Teen goes, this could be a major win in North America, as well as the other countries that they represent. Speaking of international, going down to almost the center there, international existing markets, growth rate of 20 to 30% annually, includes Australia, UK, New Zealand, Ireland, and Hong Kong. So international is here. It's already in line. This isn't a dream to take an American concept and go international. We're already operating. And then you go to the last highlighted box, international new markets. Obviously, you're operating in whatever it is, 5 or 6 countries now. There's a huge opportunity to get even bigger in there, and the anticipated revenue contribution of $100 million from new countries each and every year. So you're going to grow roughly 20% in every market you already exist in, right? And then you're going to add $100 million of revenue for every country that you launch in a given year. That's a pretty good setup, and it really gets me intrigued. All right, so the bottom line for me, as far as SmileDirect goes, I believe in their value proposition. I believe that this is a product that is generally going to be in demand for the foreseeable future. They're offering a solution that's cheaper, remarkably cheaper than metal braces, and cheaper still than the Invisaligns you've probably heard about. So here's my whole bull case. As you see at the top, COVID setbacks will resolve by summer of 2021 or sooner. Number 2, dental partnerships will strengthen brand and awareness. I think having a doctor tell you that this is good to go in person is really going to help, and I expect conversion rates to go up. Number 3, USA and international leave plenty of growth opportunity. We're not even near what could happen with this company yet if they execute. Finally, on my end, I expect the stock to hit $20 plus in 1.5 to 2 years. I'm in around the $7.60 range, so that's an easy double up over the next 2 years. The bears, of course, are going to say that COVID issues have stunted the growth and that growth machine may not carry on until 2022. And there's other bears, I would say, that just generally have a lack of faith in the product and growth plans. Ultimately, for me, I'm buying under $8 across the board for up to about 5% of my portfolio. This is, a little bit of a speculation play, Profitability is coming though. The stock got dinged twice this year, which makes it sort of a reclamation project. I feel pretty good that I'll end up in the money. All right, guys, hope you enjoyed this look at SmileDirectClub. Please give me a like and subscribe if you did. See you on the next video.